and hand you over to Mr. Tom Williams.
Right, thank you, Peter. Yes, this is Tom Williams here. Lovely to be talking to you. And please don't hesitate to type in your questions. And Rita's here, and she'll pick it up from the screen, and we'll do our best to answer it. The market's been fairly bullish the last few days. I think it's running into just a bit of hesitation at the moment. Now the chart we have up on the screen at the moment is a 7-minute. Now there's no reason why I've got the 7-minute up. Could be a 15, could be any time frame you want. However, 7-minute look. This is earlier on. That's an up thrust. Certainly a sign of weakness. So on that, the market comes off. It soon picks up strength here, though. There's a bit of buying there. There's a signal to help you.
Basic test.
Basic test. And on the back of that, it's gone up, look. Now what's interesting is that when you see these markets trending with what I call the simple trending system, in other words, if the bar's blue, it means that they're in control because they don't want to lose control of any move. They don't want to frighten other major players that may want to dump, right? So each bar will be higher. The close will be higher than the close of the previous bar, and that ensures it's going up. Allow for one down bar. There's one down bar, look. The volume should be low. And there's a signal on that. That's a test in a rising market too, as you see that. Actually, that's quite a good lesson there, look. It's very obvious. It's down bar, closed near the high. The spread is relatively narrow, but the main thing is there's no selling pressure, and you've got this behind you with a move up. So you know that at that moment it's bullish. Up. And there's another test there, look. And that's why it's going up. Now it has hit a bit of hesitation up here. And that's what made it go sideways somewhat. If you look at these individual bars, you can read what we call strong or weak bars here. Most of them equalize each other out. So in other words, that's gone up, look, that one. A little bit of supply on it. Down bar, no supply. And that's what makes it go sideways, look. So there's not much we can read into that at the moment. We can look at any time frame. It'll all tell us the same sort of picture, I can assure you. Now 7-minute, we can look at 20, for example. Yeah, 20-minute chart. Bit of supply back here. Market goes sideways. No demand, no selling pressure. So they decide to try to have an up thrust. So they ram it up. Opportunity probably on news, right, and mislead you. Whipsaw the market, catch stops. It turns around, falls down, and some buying comes in on this low here. And then it just goes up. There's a bar there showing there is a bit of supply hit the market. Now this one here, look, it's beginning to look a bit weak, that particular bar, but it hasn't finished yet. Now, please, if you've got any questions about anything.
There is one here, Tom, on this chart. Yes, Tom, Edmund comments on this 20-minute chart. He says, it looks like there is no demand back into the high volume bar to the left at the moment. Yeah, so,
True.
Yeah, there's your big, and then so that makes 4 minutes left on this.
4 minutes left, apparently, on that bar. Very good observation. So you're well on the way to reading the charts, I'm pleased to say. It's not sort of necessarily crystal clear at all times. You have to develop what we call a setup. Now, I'm not sure how Gavin's alert system's going. He's very optimistic. Every time I talk to him, he says, oh yeah, they're all wonderful. But I'm not quite sure what exactly what's happening. We've done a stock selection the last few weeks. I think most of those have been reasonably positive. Are there any more questions, Rita?
Yes, one from Carlos. Yes, Carlos asks, are they shaking traders out after the news today?
What was the news?
Hello, Carlos. It's Peter here. Just Tom was wondering, what was that news? None of us today have been looking at any news. Perhaps you could just type that in for everyone.
It certainly looks like news, doesn't it? That's what appears to happen on news. They love to whipsaw the market. 130, 255. What was it? What was the news there?
Where's the 130?
Must be here.
At 1:30, let's just narrow it down a little bit.
At 1:30 there was core retail sales.
Nothing much happened there.
At 2:55 prelim UON consumer consent. Retail sales, says Craig.
Was around about here then.
Yeah, so that was the consumer consent.
It must have been bad then. All good.
Wow.
So are they shaking traders out?
Well, they always love to shake traders out. Definitely. But when you think about it, now that last news event, you say retail figures, whether they're up or down.
Yeah, retail at 1:30 and at 3 o'clock was prelim consumer consent.
Consumer consent, okay. Now, you've only got to think about that for a few seconds. It's like standing on a railway bridge. You've got an express train going through, right? And you throw an empty carton of ice cream at it. And so it won't make the slightest difference. But if you wanted to, you could say that was bad news. Somebody thrown something at the express train.
So Carlos is saying, was this a shakeout here?
Definitely.
Yeah.
That looks like a shakeout.
Yeah.
That definitely looks like the sort of thing they do on news. Now, you can be rest assured that nobody is there to give you any help in the stock market. It's not their business to help you. It's their business to make money for their own accounts. And they will whipsaw the market on news. And that's why they like you to listen to the news. That's why they like to give you a string of times when the news announcements are going to be made. Why else do you think they're doing it? Think about that. So it makes it pretty obvious. But we listen to the news for amusement very often, or play with it, see what happens.
A comment here from Michael. Are you talking about this particular chart, Michael, this 20-minute? Could you type into the questions box? Michael saying this looks like last week's one up bar, one down bar. Yeah, this looks like last week's one up bar, one down bar, next closing in the middle. While I'm at it, can you quickly review in a sentence or two exactly where the last reaction is?
Where the last reaction is. Well, the last reaction is the last low. But they do that. You'll see they mark the market up, they mark the market down, close the middle. They whipsaw in the market to see how many stops and mislead as many people as possible. But it just shows you as well, they're not quite sure of the position of the market right at that moment. And that's why you're likely to see that type of action fairly early in the day. But right now, this market does not look terribly bullish. But I can't see any obvious setups to say you should go long or go short on that. But when the setups come, they are clear. And that's the whole idea of Gavin's emails with these setups. I mean, he's asked me, I do a few stock selection with Rita and Peter, but I don't have, I'm retired now. I've been retired for many years, and I'm not active part of the business. So I'm not enthusiastically get up looking for setups every day. I'm sorry about that, but they're there.
I've got a question here from Gordon. I find the Forex market difficult to trade. Is this partly due to the large number of traders and that they are especially skilled?
Well, the Forex market is very good. It's actually quite easy to trade. See, with the Forex markets, you do nothing until you see them obviously doing something. They can't sell or buy large amounts of activity in the currency markets unless you can see their footprint there. And the currency markets will have their own personality. And that's why you need to specialize, really. So you recognize what they're doing, but keep plugging away at it. It'll become fairly obvious. But currency markets are actually quite easy to trade. Gavin was in a trading competition last week, and he won it by shorting the euro. And he won it hands down, apparently. Shorted the euro. So he must have seen something, a principle for him to short on.
Yeah, so it's Peter here. So VZ for Philip. Hello, Philip. Yeah, that thing about Gavin doing his trade-off, or whatever they call it, competition. Tom's actually sometimes said, or often said, that the trouble with doing that sort of thing, live trading, if there is a trouble, is that there has to be a trade there. In other words, you could be on a live seminar or a competition, and as far as VSA is concerned, there is no trade there. And then you're kind of pressurized into seeing things that might not be there. So I was watching the chart. I wasn't watching Gavin's seminar. I couldn't get in for some reason, but I was watching the chart anyway during that hour or half hour, whatever it was, and saw a top reversal. So I thought, well, if he's watching what's going on, he'll be okay. But it was fortunate there was a principle there. So the point of me saying that was, in the past, certainly, I've taken trades where there wasn't really a principle there, not a clear principle, and I've come unstuck. So I've learned now through experience that's cost money, just to, as Tom used to say, wait for the bus, your bus to come along, wait for the principle to turn up rather than just expecting to be able to, take a trade at any time you feel like it. You've got to wait for that principle to come along, and then, to coin Tom's phrase, go for a low risk trade. So on the chart now we have VZ, Verizon, or Verizon, I think it's pronounced actually. Verizon, it's a communications company in the US.
I can put less bars. Yeah, so if I put 20 there, it's a bit clearer now, hopefully. So a bit of this up here.
Yes, obviously there's been a lot of weakness. It's been marked down. However, here, look, we do have stopping volume. Now, they can't hide that, look. It's a down bar. It's a fresh low ground. Right? The activity or volume is massive. It's very high, look. On that is close to the middle. Only intervention from professional money, that is people that are trading 50,000 shares or contracts, move into the market, can do this sort of thing. And that is definitely buying, look. Now, once you know that's there, right, you now wait for confirmation in the form of a test back down into that level. So the market's falling now, and it does look here, you could say that is a test. Now what we could do, if we draw a line across there, look, that's the level of supply where I've drawn that line. Had this bar gone down and reached that, and we look at the volume, it's low. So in other words, the supply that was present here has now been absorbed and disappeared. And that's bullish. And that's why it's gone up a few bars like this. Now if you see a test now at any time, then that's going to go up. Because this definitely looks like substantial stopping volume here. And the market without question moves on supply and demand. So when you see this volume, the volume must be created by supply present, and they're buying it. Now when the market goes up on that and comes back down to that level, or that level, yes, and the volume is now low, then surely that must mean that the supply that was here, look, has disappeared. And because the market moves on supply and demand, that means it has to go up. It follows the path of least resistance. That's why it's going up. Now, they may want to test the rising market or something. You'll spot that, and you've got a golden opportunity. Mine, this is short term. If you want longer term answers to a stock selection, Philip Friston is doing that apparently. And he's very, very good at it.
If you've got any charts that you want Tom to look at, then please do. Or any principles you've got any questions about, put them in the... So Tom's saying that definitely is one there on Verizon, or sort of Verizon, as you're saying, Peter. Okay.
Okay, so we've got a request from Mike. No, Apple. So that's had a bit of a sudden move, gap down by the look of it. That's Apple, Tom. And Mike's asking, can you talk about this?
Well, we know Apple is, generally speaking, acting very strong, although these gap downs like this, but this last bar here, look, it's a down bar, narrow spread, admittedly it's gap down, but look at that massive volume. There's definitely buying there. What's that say?
Potential selling climax.
Right. In other words, they've marked it down, and people have panicked selling, right? But professional money has absorbed that. That certainly looks like strength there. But what it needs to do now is do exactly what we said the previous chart should do. It should go up a few bars and then come back down to that level. This level here. That level there. And test. And if it comes back down to that level and the volume is low, I mean, it may not happen for some time, who knows? But if it happens, that's if it happens, then you've got a golden opportunity because you've got a set up there. Yeah.
Yeah, I'm just reading here. Park says the announcement of the new iPhone was a disappointment, so they gapped it down.
Right. Well, it still resulted in a shakeout, hasn't it? And it does, despite what they've done there, they may have gapped it, marked it down, but certainly shaking a load of people out. And you can see that it's been absorbed or bought by the narrow spread, massive volume. It's even closed in the middle somewhat. The next bar's going up, look. So it must be buying there. Professional money, that is, buying, despite the so-called bad news.
This is the weekly chart. Is it up to date, Peter? Yeah, of Apple. Carlos says, please look at the weekly chart of Apple. Looks like a testing of the creek. Tom's just examining this chart at the moment. Do you want me to put more bars up at all?
Well, I can see that. There's a supply there, probably high over here somewhere.
We can just put up very briefly bars.
Put up a few more bars. See that widespread up there? Yeah, that widespread up on that increase in volume could be a bullish indication because they're absorbing anybody trapped in here that wanted to sell. If you see any sort of testing now, that's going to go up. But it's not a clear setup right at the moment. It needs to come back down and test. Well, yesterday we saw the gap down, very, very high volume. That was definitely buying. Professional money has stepped in and bought. However, what we now need is that test. We need to see it go sideways a few bars or up a few bars, arc over, and then come back down to that level. And if the volume is then low, that's going to go up. Because the market, without question, moves on supply and demand. Supply and demand from the professional players who are trading 50, 100,000 contracts.
Japanese yen daily. All right. Okay. Carlos wants us to put the yen daily chart up. It's here. Shall we put less bars?
Yes, I can't really see that Japanese yen. I don't really. It's so liquid. It's a stock, really. It's a currency that you need to specialize in. I mean, I'll give it a quick look over and see if there's any principles. But if I sat here and specialized in this and looked at different time frames, I could probably give you a very, very good analysis. But see this here, when you see these wide spreads up, pushing up through these highs, that's bullish. And then they test it. Look, there's the test. But there is a little bit of supply there. And that's why it's hesitant, look. That's why it's even testing again here, look. Okay. What do you do, Sherry?
CONN.
It's
Okay, Mark is asking for us to look at CONN. We're just trying to find it. Yeah, that's what. Oh, okay. So we've got the daily chart up here.
Well, I personally would never touch a stock like that, not at this stage, because these stocks are capped down on these wide spreads like this. That in itself is bearish. Wide spreads down on an increase in volume as it pushes through areas of previous support is bearish. And that certainly meets that criteria, look. It's very high volume. But the market's finished up here. It's obviously signs of weakness. Look, up bars, narrowed spreads. That's certainly no demand. So what you need, if you wanted this to be bullish, you'd want to see it go up a few bars and then start testing. And testing on volume a lot lower than this. And then, because the markets move on supply and demand. But if it doesn't do that, it's not going to go up. I would leave that one alone.
Okay, thank you, Tom. Just a quick look at the questions that have been coming in. So, question from Gordon. Gordon says, do you know how to get hold of Philip stocks? Well, Philip can type something in the room so I can answer that question specifically. But as far as I know, Philip does, is it once a week, Tom? Yeah, Philip will reply hopefully in a moment. I'll relay his reply to that question, assuming he's listening. Steve saying, do you have the settings for the Trade Guider Kagi charts to reproduce in Ninja Trader? No, I don't. One suggestion is you might email support@tradeguider.com and maybe they'll be able to answer that question. We can't hear. We just don't know. Simple as that. Although I have actually looked at a few other charting packages with Cargi and found that their settings, whatever they are, seem to, work as well, or work as well as. So Philip's saying, sorry Peter, just popped into kitchen. Could you repeat the question? So the question was from Gordon, do you know how to get hold of Philips's stocks? So I think he's referring to Tom's mention.
Carl's saying support won't be able to help him either.
Yeah. So Philip, can you say something in the room about your stocks? And I assume the question revolves around your stock picks or something like that. And while we're waiting for that, Carlos is saying the settings that TradeGuider use, it seems to be a mystery. Not even support was able to help me. So that's not the way forward then, obviously. And this is, I'm talking about the Cargi charts. So we don't know is the short answer. So while we're waiting here for Philip, hopefully Philip's got an answer coming up. Jack saying, Tom, could you please tell us a bit about stick, or that must be stock signature, and how you would go about studying a stock you wanted to follow seriously? I'm not sure what this means here. LNKD given a choice. LinkedIn. Oh, LinkedIn. And we're talking about US stock. So Tom, as far as studying a particular stock, how would you approach that?
Well, what I do is, first of all, you need to trade in harmony with the index, of course. If you place the cursor over the first stock in your list under which index it's in and keep pressing the plus key, it'll quickly move through your stock selection that you have on the screen, and you'll come across a stock that appears to be resisting the down move. This is really what you're looking for. And also a stock not only resisting the down move every time the index falls, but there's no obvious signs of weakness in the background. Any stock selection that we give out, there's no weakness that we can see in the background. That's the main criteria, right? And that's how I do it, and it works. And you can just check your stock selection once a week, and as soon as you see any high volume come in, you can then change that selection.
Thanks, Tom. Yeah, so Philip, Gordon was asking about something Tom referred to. Tom was referring to how you were providing some information on picking stocks for the longer term. And Gordon was saying, how do you get hold of that? So that was the question, if that makes sense.
Philip says he only does that through his webinars. Okay, thank you, Philip. They're every week. On what night, Philip? It's Tuesdays, is it? Or Tuesday, 9 p.m. UK time. Okay, thank you. Steve is asking for the Aussie and and of course, Philip saying the recordings are in the club archives, so check through them, look at all of those, watch them. The Aussie and US dollar, that's it. Steve is asking for the have a look at the monthly and the weekly. He says, looking to possibly change trend. Can you have a look? So Tom, this is the monthly of the Aussie dollar, and then we'll look at the weekly. Do you want to have a look at the weekly as well before we...
Well, that looks weak.
Okay. Right, so we'll put up weekly. Let's put up more bars. So Steve's saying, could it possibly be looking to possibly change trend? I'll put less bars up now. That's the weekly. Weekly of the Aussie dollar.
Well, to change the trend from those fairly obvious distribution areas at the top, you're going to have to see stopping volume come in, or a selling climax, or buying climax. I keep getting the two mixed up. At the lows. So you see on the red down bar, narrow spread, massive volume. Then once they tested that, that will change the trend. I don't think we've seen that. I can't see it anywhere. To me, it still looks weak, the Aussie dollar. Certainly not looking bullish to me.
Yep, Steve. Philip says on Tuesday he looked at the Aussie dollar futures, but only on the daily. So if you want to have a look at what Philip said on Tuesday, then look at the archive there on that webinar on the VSA Club in the archives. Euro, Peter, against the US dollar for Alan. We have a look at this. So, Tom, this is the euro against the US dollar daily chart. We had a trend channel going there at some point. Right, we had that. So that's how it is.
Well, look at the trend lines, and it seems to be trending up in the longish term. However, there's a top trend line. Seems to be running out of steam, doesn't it? Seems to be running out of no demand. Although there is a test of some sort here, look. Yesterday's bar, no supply. So that's a down bar. No selling pressure. But does appear to be trending up in a sort of fairly wide range. A little bit of stopping volume here, look. And that's why it's moving up. Widespread up usually is fairly bullish in this situation. It's still trying to go up, look. But nothing so obvious that's jumping off the page for you. Having shorted this sometime during the this competition and beat everybody else hands down apparently.
Oleg says, okay, well, Alan's asking, so it's just grinding up and ready to break out, is it?
Well, I'm not sure about this waiting to break out business, but certainly drifting up. There's nothing really obvious that I can see.
Sorry, not ready to break out.
I'm not ready to break out. That's a bit more like it. Yes, it's just drifting. But suddenly it shows its hand. Like all these charts, you suddenly see a test or a shakeout or something that you can identify and will give you courage to go in and do something about it.
Oleg is asking, what was Tom's trading style, investor or trader? How much time or days did he hold the stock?
Well, I worked for a syndicate, and I didn't have the money or sufficient funds to keep pace with everybody else at the time. But they would remove what they call the floating supply off the market. When a stock is issued, it's obviously issued with so much available stock. Now, when they look at this stock, right, most of it is held by banks for loans. It's held by directors to keep control of their positions. It's lying in bottom drawers. People never look at them, and so on and so on. But what is available is what they call the floating supply. And if you could judge it and time it properly, you could remove most of that supply off the market. And then once you've done that, you've cornered the stock. And then when the market conditions are generally right, then you can move that stock up with it. And so really, it all depends market conditions. I saw one stock, they were accumulating 7 years. So I'll give you some idea. But that was rather a long time, admittedly. But stocks, if you're very lucky, like when 9/11 happened, you could absorb them over a week or two, and which they did, which they never told you about on the TV. All they did was look at you through the lens of the TV cameras, two of them looking straight at you, telling you how billions of dollars worth of shares have been lost, how Al-Qaeda's all over the place, the president talking about, are you with us or against us, and on and on. But on that backdrop, if you look at the chart, it gave you a down bar, narrow spread, a fresh low ground, and the volume was massive. And that was massive because they were buying. It was what we call bag holding. And if they were telling you the truth, which they never will, they should have said to you, well, look, don't worry about all this bad news, because our dealers on the floor of the New York Stock Exchange, so we're told, are buying everything they get hold of. Everything. That means that this market's going to be bullish rather than bearish, and all this bad news is inferring. They never tell you that. That's what happened. So, and that market went up for several months after.
Edmund asks, can we look at BA, Boeing, weekly? You remember there was that fire, we were doing a webinar that day. Now, yeah, weekly chart of Boeing.
Well, that's obviously bullish, isn't it? I mean, it's acting stronger than the index, or certainly as strong. The only high volume is here, which can easily be put down to absorbing supply from the left. And they will have tested that somewhere. And that's going up, look, that's bullish. There's no massive volume on up bars. There's a little bit of no demand here, that doesn't mean much when it's like this. So that's bullish. What happened to the plane that caught fire at Heathrow? It's all been quietened up.
Okay, thank you, Tom. Anybody got any other questions while you've got Tom here? Could be a stock, could be a question about a principle, or any other question you think Tom's going to give you an insight into.
I've gone back to the 15.
Yeah, this is the live 15-minute S&P future. Tom, do you want to say something about this chart at the moment?
Well, it's happily going along in a sideways movement. It's due to the shakeout here. And even this up here catching stops. And if you look at these individual bars, if you analyze these bars very, very carefully, you'll see that they're also telling you a story. No demand, blue up bars. Perhaps a little bit of buying on these red bars. A little bit no demand. And that's what's making it go sideways. It's going sideways because of this movement here. And this. So it's a mixed bag here. Usually when they try to go up, try to go down, to close in the middle somewhere, it means that the professional money are not sure of the status, the position of the market at that moment. Because they can only judge a market like we do by the balance of supply and demand. There's no really other way to do it. So it's just trundling sideways.
This is gold,
Right.
Right, this is that's the general look.
Yeah, 20 bars. Well, it looks weak, doesn't it? You've got weakness at the top, up bars, narrow spread, increase in volume. After there's been a move up, so you're vulnerable to somebody wanting to take some profit. Right? This blue bar be up on no demand. And that one will be. It's gapped down probably on some news of some sort. It looks weak. Where's the buying? Where's the stopping volume? Where's the climactic action? That market's falling. And once they start these trends run longer than you think they will.
As a matter of interest, that's the weekly of the same
Yeah, well, there's weakness at the top, look, which you can identify fairly easily on this weekly chart. I mean, the computer can come up with something, right? There was some buying at the bottom here, look. Yeah. Up, up. That'd be a test of some sort. Up, up. But it's hit supply, look. And that's why it's coming off. These wide spreads down like this, close on the low, are bearish. Because they do that deliberately to lock as many traders out or even in the market as possible. If they locked you in, you're trapped in at the high there, you're what we call a potential loser, right? Liable to get shaken out. And of course the widespread down also, if you were going to be smart enough to short, once that happens you think, oh hell, I missed that now. So it all works for the professional trader, knows what they're up to. It's not there for your benefit. So that market looks weak.
Microsoft, Peter. Okay, here Microsoft has been up and down on the daily chart, difficult to trade. To stay away, I assume. Any comments? So putting Microsoft up daily, Tom. GR is saying it's been difficult to trade, suggests to stay away. So should we put more bars up just to show a... So this is Microsoft. We had this very, very high volume there, Tom. But after a terrible gap down, and then we've had very, very high volume here, more supply, and now we've come back to here. All right, hang on.
The reason you're having trouble trading this is because you've got so many signs of weakness in the background. I mean, you've got this up here, it's obvious, very, very serious weakness, look. Be some fundamental thing going wrong here. There, falls off. Gap down, also very bearish. A little bit of buying there, which is natural, seeing it gap down so much. Floating up on no demand. This doesn't look as if it's going anywhere at all.
All right, this will be our last question, so we're running out of time, from Alan. Tom, do you ever use floor trader pivots on charts to verify support and resistance, or are they superfluous to VSA?
Well, I personally never use them. The only reason I don't use them is the syndicate never used them. Pivot points. But I've heard many, many people tell me on the phone that the pivot points in VSA are excellent. So I wouldn't write them off. I personally don't use them, but they're supposed to be very, very good in the end of day version of VSA. And the real time. They do represent something. Let Peter say it.
Yeah, so as I think quite a few traders use pivot points, and I certainly wouldn't go as far as to say I use them, but perhaps I do really. I take note of them. So if a price is approaching a pivot point, then I'm very watchful as what's going on, because that could be a point of resistance or a point of support, or a temporary, lull as accumulation or distribution takes place. So I usually have them switched on, is all I can say, and I think quite a few traders do. There are some traders around, I think, who rely only on pivot points, so they do have an effect. And pivot points are generated quite simply by a simple mathematical equation, which I can't tell you offhand, but it's very simple. If you go onto the internet, you can find out exactly what that equation is. But on the TradeGuider software, it's programmed in, and I'm sure on other softwares too.
Alan is asking, can I get them on the plugin? Peter, can you help with that?
Yeah, so is it available on the plugin? Well, usually, as far as I'm aware, it'll come as a standard on any or some charting software. Specifically on plugins, it doesn't come with the plugin. If the plugin is run, say, on, I don't know, some software like, I can't think of one now. Rita, what's one? Infinity platform, Sierra Charts. If that has pivot points in it, it has pivot points in it. But I don't believe the plugin itself generates pivot points. I could be wrong, but that's my understanding.
That's it. So.
Okay, with that, we'll say thank you very much for coming along. Have a good weekend, and we'll be doing, as usual, our newsletter over the weekend. And anything else, Tom? No? Rita?
No.
So thanks for coming, and we'll see you all next week. So have a good weekend and a good week. And we'll see you then. This is being archived, by the way, so I'm going to upload it shortly. So if you want to see it all again, or you missed the beginning, it'll be there, hopefully today.